Hi, I'm Adam,
This is Kevin.
and we are Tech Guys Who Invest. This is the place for business people and investors to learn all about investing. We offer a fresh perspective on what it's like to have a day job while investing, and we share lessons learned on our investing journey. Our vision is to educate and entertain you while adding tons of value to your daily commute. Welcome to our show.
Welcome, everybody, to another episode of the Tech Guys Who Invest podcast, where each week you learn how to invest wisely and safely. This episode is all about how to find deals, but this is a two-part series because we're going to talk about it from the passive side as well as the active side. And for part one, we're going to share with you how to find deals as a passive investor.
Yeah, so let's start off by what we mean by deals for passive investors. If you are someone who wants to invest passively, and we can talk about what that means real briefly, what does it mean to have a deal for you? Because it's probably a little different than someone who's a full-time active real estate investor. So I'll just start off by saying, when we say passive investor, we're talking about somebody who wants to invest their capital, but they don't want to take an active role in essentially finding and managing the deal. So that's kind of what we mean by passive. And then when we're talking about a deal for a passive investor, essentially we're talking about something that is an opportunity to invest. Kevin, would you have anything to add to that?
I agree with everything that you said, where the passive investor is kind of sitting back, relaxing, and helping their money grow. As far as deals go, yeah, you're 100% correct. It really depends on your asset class is what it boils down to. Because if you think about it, if you're a stock investor, that, in my opinion, is pretty passive. If you just kind of put it in, let it sit. If you invest in a syndication, right, that's relatively passive. If you're a limited partner, for notes, for example, whether you're passive or active, performing notes are pretty passive in general, but there's an active component to it. What's another? Oh, single family homes is what I'm thinking of. Those can be passive, right? I think you and I were talking about that, Adam. Turnkey is an example of how those can be passive.
Yeah, it's interesting because when we were talking about it, at first I was thinking, well, how could you passively invest in single family or plexes or something like that? And then we started talking about, well, turnkey is one way. It is truly passive. So this applies to that. How would you find a turnkey deal if that's what you were interested in? Or how would you find a note if that's what you're interested in? So in this episode, we'll just cover how to get those types of deals. And then it's important to note that you should do your own due diligence. That's not what this episode's about. So we just want to be real clear that Kevin and I are big proponents of making sure you do your due diligence on whatever opportunity you find, even if it's a passive one. It's just as important.
Absolutely. That's the difference between being an investor and gambling. You could say you're going to invest in, I use the stock market because it's the most popular thing. If you're investing in the stock market and you just pick a company without really doing your research on them, you're really just gambling there. Is there a chance that they'll your stock will appreciate? Sure, but you need to know what you're getting into. You need to know what you're investing in. The same holds true with being a passive investor. It's almost a misnomer to an extent, where you're delineating from an active investor, but the passive side, there is a level of activity you should be doing. And maybe that's inherent in being an investor, right? You're doing some due diligence, whether it's the deal you're analyzing or the sponsor of the deal, whoever you're partnering up with, doing due diligence on them, looking them up on Google, asking them tough questions, building relationships. Those are things that you need to be doing as a passive investor.
Yeah, it's a good point, Kevin. And I think for those who have only ever put their money into a 401k, some kind of a company sponsored plan, you may have gotten used to not doing anything and putting your money there and just trusting that they're going to be good stewards of the money. But that is not what financially intelligent, financially mature people do. So we want you to learn to do that. If you start doing that, even with that money, pretty soon you'll be investing in real estate instead of putting your money into those things, because you'll start to find out what really happens behind the scenes. So it actually doesn't matter whether you invest in real estate or something else. You should be doing what we're talking about right now and really educating yourself on exactly what the investment is and where the money's going. So why don't we
Agreed.
start with ways to find ways to get deals? So Kevin, what do you think a good way to get passive deals is?
So with the core of it, you need to have somebody on the active side, right? That's the number one piece. Unless you're doing a fund or you're doing a REIT, which is equivalent to a stock, then that it already exists. Even if it's like a Fundrise, which I think is a fund, or it might be a REIT. I'm not sure, but my point being is you need to find that active component, whether that might be another active investor if you're not doing the funds, REITs, or whatever I mentioned earlier. That being said, where do you find these active investors? Where are they hanging out? The good news about investors is they will let you know that they are investors. And that's part of their marketing, right? They're always trying to raise capital. They're always trying to find deals. So it will be easy to find those who are investors. You can go to a meetup. There's a lot of virtual meetups still, given COVID-19. You could subscribe to a podcast like ours. So shoot them an email. If they have a podcast, if they have a website, I guarantee you there is a contact page where they let you know how you can reach them. There is, what else is there? I'm thinking blogs, meetups, have meetups already. Social media. Social media is another way that you can find them, whether it's LinkedIn, Instagram, Clubhouse, TikTok, whatever the new ones are. If there are investors on there, they will let you know. So that's probably the easiest way to find them, is searching for them, because they will let you know that they're investors.
Agreed. And another good, I don't know if it's another way to find them or if it's part of what you already mentioned, but establishing relationships. Maybe that's it, kind of the core of what you were talking about there, Kevin, is it's not much different than establishing relationships for other reasons, like business reasons. Doing networking, asking friends who invest if they would recommend someone you to talk to, looking on LinkedIn for other people whose profile might match yours. Things you might do to just establish relationships to meet a goal are things that work here as well. So some of the things we just mentioned there. And then one other one that comes to mind for me is getting on lists. Ways to find the lists include those we've already mentioned, but you'll start to find that investors have lists, deal lists, and these are people who they send their deals to. So get on those for people who may interest you, and you'll start to receive communications from them periodically that have deals and available opportunities. Now, one thing that's important for those, once you get on a list, it's okay to just get on them and start to see what's out there. Once you start to get serious about the opportunities people are sending you, it's just real important to make sure that it's a reputable operator. It doesn't matter whether it's a syndication or a note deal or one of those turnkey operations. Make sure the person who is the active investor is reputable. You want to check their character. You want to make sure they're competent. You want to make sure they're credible. And there are some good checklists out there that you can use to kind of ask questions to be sure that's the case. It's just important that you check out the operator and their team before you actually invest.
Yeah, Google review of that investor. If they've scammed somebody in the past, or if they've done something bad with the money, and somebody lived to tell the tale. Not that you would die losing money in investment, but my point is somebody's put that on social media. So social media goes both ways. There are investors out there who have done bad things with money, and there are victims of that, unfortunately, who have posted on social media and forums and saying, look, avoid this person at all costs. So that being said, if you saw that, you would want to avoid them, right? It's just kind of a simple thing, or just don't go in that direction. If all the signs are pointing to you to tell you not to do that, then don't do that. Another advantage you have when you're working with active investors versus, say, like a stock or a fund, is you can ask tough questions. You can ask them, hey, what's your resume like? You can build that relationship with them, build that trust so that you can ask those tough questions. Good luck doing that with your 401k, or good luck doing that with your, if you're investing in a Fundrise deal. And I might be wrong because I don't invest in Fundrise. But my assumption is you're so far removed in something like that, you wouldn't be able to ask those tough questions to those operators. And if I'm wrong, please let me know. Shoot us an email, techguyswhoinvest@gmail.com. To be honest, I made a huge assumption there. But anyways, when you're working with an active investor, you can, as a passive investor, ask those tough questions. What happens to my money if things go south? How are you going to protect me, right? Like, those are all fair things you should be asking, not only yourself, but also the investor you're going to be working with.
Yeah, agreed. And the other thing, in addition to ensuring they're reputable, is I do recommend seek to establish a relationship with them. Get to know them and have them get to know you. If it's an operator who kind of blows you off and won't give you their time to do that, then perhaps they're not the right one to invest with. So there's a little tip for you as well. One other thing that comes to mind, I guess, is conferences. And I know conferences look different right now than they did in the past, where they're virtual at the time of this recording, and there really isn't much in-person stuff going on. But that'll come back eventually. And whether it's virtual or in person, it's a great place to meet people and to find out about people who may be actively investing. So that's just one other. And boy, I think we covered a lot of them. Kevin, is there anything you can think of that we might have missed?
No, not that I can recall. And so just to recap, if you're a passive investor, how do you find these deals? Ultimately, finding the investors is going to be easy, whether that's through a Google search, through social media. Investors will let you know that they are investors. Or if you're going to events like webinars or meetups or conferences, again, investors will let you know they're investors and what they invest in. What's important for you is to understand what it is you want to invest in. Maybe that's talking to these operators and learning what they do and learning more about that asset class from the active side, the pluses and minuses, the pros and cons, rather, asking those tough questions to the active investor. What are the cons of note investing? What are the cons of multifamily? Like, those are things to ask them. That way you can better educate yourself, because you don't want to just put your money into a deal, give it to somebody you don't really know, because that's not going to be a recipe for success. So finding the deals is good. The next step is like you building those relationships. If we missed anything, let us know. Shoot us an email at techguyswhoinvest.com. We'd love to hear what your favorite ways are to find deals when it comes to being a passive investor.
Thanks, everybody.
Hello, TGWI insiders. We'd like to talk to you about our big goal for 2021 that we're determined to hit, but we need your help to hit it. Our goal is to get 250 positive comments on Apple Podcast.
You can help us in less than 1 minute, even as you're listening to this podcast episode. On your phone or computer, you can do this in 3 simple steps. First, search for us on your Apple Podcast app. Second, navigate to our podcast page by clicking our logo. And finally, scroll to the very bottom where it says leave a review to leave us a 5-star review and a positive comment.
You can also get these step-by-step instructions by going to tgwipodcast.com/review. It's fast, easy, and would help us a ton. Thanks for your support, insiders. That's it for this episode of Tech Guys Who Invest. This is Adam.
This is Kevin. Thank you so much for listening to this week's episode. Be sure to subscribe to the podcast for the latest episode updates and to receive additional investor insights to help you invest wisely and safely. You can join the TGWI Insiders community at tgwipodcast.com/subscribe. Lastly, we would love to connect with you. The best way to reach us is by sending us an email at techguyswhoinvest@gmail.com. Thanks, everybody.